All right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk to you about CPI data that came out this morning. This is the inflation data. This is hot off the presses. It's been about 2 hours since the data came out, so I've given the market a little bit of time to react. So I want to go through the data itself and the market's reaction. So if you're new to the channel, please remember to subscribe and hit the notification bell. Still, close to half the people watching are not yet subscribed to the channel, so I really would appreciate if you guys subscribe. And of course, if you could smash the like button. Lastly, if you want to support the channel, you can hit the join button on the YouTube page. It's right next to the subscribe button. If you don't see the join button, you should see a link in the pinned comment below. Members get a bunch of extra content that is for members only. We do a live stream every Tuesday, which is today for members only after the market closes. We also have a private Discord for members only, so we share a lot of good information on there as well. So let's go through the CPI. Okay, the first thing I want to do is look at this. This is trading economics. This is the historical data. This does not include today's report. So before the CPI data was announced, you can see we have been on a 6-month streak of inflation going down. The CPI number has gone down for each of the last 6 months. It peaked in June of 2022. So last month it was 6.5. The annual inflation rate in the US likely slowed to 6.2% in January, the lowest since October, compared to 6.5% in December. So this is the expectation just prior to them releasing. And if we go down to this chart, you'll see the consensus expectation for this month was 6.2%. The previous month's actual was 6.5%, and this was just prior to the release, so this was blank. Well, we've got the data now, and this came in at 6.4%, so that was above the consensus. However, it was below last month. So this is just what I talked about. If you watched my video yesterday in what to do to prepare for today's CPI numbers, I felt fairly confident that we were going to come in somewhere between the expected 6.2 and last month's actual of 6.5. I did think that if we came in above 6.5, that was going to be a problem and the market was going to take a big hit. But that did not happen. We came in just one step below that at 6.4%, but that extends the streak. This is now 7 straight months that CPI data has moved in the right direction. So the knee-jerk reaction to this was actually negative because obviously it was above consensus. People thought it was going to be 6.2. And it turned out to be 6.4. But as this information was digested, and I'm going to go through some of this information with you right now, I think the market has decided, yeah, this is pretty much what we expected. There's one or two things that are being a little bit stubborn that we would like to see change, but the rest of this report, I think, was very much as expected. Also, there was a lot of fear built up in the last 48 hours that this number was potentially going to be a big miss and a disaster. We avoided the disaster, and sometimes this is all about expectations. Okay, so first let me show you where the market is at right now. We're about an hour and a half into the trading day. The S&P is up 0.25%. The Dow is actually at 0 at this moment. The Nasdaq's up about 0.5%, and the Russell 2000 is up just a little bit under 0.5%. Now, this has been fluctuating. If you look at these charts, you'll see all 4 of these were deep in the red at 9:30 at the open. Subsequent to that, they moved up into the green, so they're not exactly off to the races, and we'll see where they go the rest of the day. This could be a sideways day. This could be an up day. I don't think it's going to end up being a down day. Now that the market has had some time to process this information, it looks like it's handling it just fine. So if I look at the SPY, this follows the S&P 500, which is the broadest measure of the stock market. You'll see this candle right here. This is on the 15-minute time frame. You'll see the very first candle had a candle wick very far down to about 409. So that was the opening candle. So we immediately opened to the downside, but even by the end of this 15 minutes, this candle turned green. And then we had a couple of nice green candles in a row. We did just have a little bit of a pause in the last 15 minutes and pull back a little bit, but we are still up for the day, and it seems like we recovered from this immediate knee-jerk reaction, which was to the downside. So just to look on the other side of the universe, we follow Bitcoin and the Bitcoin miners all the time on this channel. So this is how Bitcoin has reacted to this. You'll see this red candle right here was when the CPI data came out, and you can see this was a big red candle with the big red candle wick even lower. Then we took about an hour to process, and then you can see all of a sudden Bitcoin started to take off. We had a green candle and then a very big green candle. So we're actually a little bit higher than we've been over over the last few days. Again, Bitcoin, at the very same time that the market took a little bit of a 15-minute breather, Bitcoin did as well. So we're going to have to see where we go from here. Has the market processed this information and decided it's okay, it's within the realm of what they expected, and we can keep moving up? Or as the day goes on and the market continues to digest this information, are we going to head back down? Because sometimes it does take the better part of a day for the market to really decide what exactly this information means. Okay, so here's the actual information. So all items is the top line. So unadjusted 12 months, we're at 6.4%. Expectation was 6.2%. Last month was 6.5%. So we didn't quite get to where we hoped to. However, we did move in the right direction once again. If we go down a little further, all items less food and energy, this is core inflation. This was at 5.6%. Again, this was at 5.7% last month, so it did go down, but it didn't go down quite as much as expected. The one thing that was right on target is the month over month was up 0.5, and that's exactly what the expectation was. So there we hit in line. I did do kind of a breakdown of this chart, so I'm going to go to some of it with my notes on it, and I want to highlight just a few things. So again, we looked at the top line here is the overall CPI data. That was the 6.4% we just looked at and the 0.5 month over month that we just looked at. So that was right on target. I have a big red triangle around the energy sector. So you'll see the top line of that I've highlighted in yellow, energy. Energy was up 2% this month. So that's 8.7% year over year. So you'll see in the middle, energy has been one of the things that's been helping the inflation number. Energy peaked a while ago and it's been headed back down. 5 of the last 6 months prior to this month, the energy number came down. So that has been helping reduce the CPI data. In this instance, the energy number went up 2%. So obviously, that's a force that moved in the opposite directions. This is one of the reasons I think that we came in a little bit higher than consensus, but all in all, the report still did come in lower than the previous month. So we don't want to see energy heading in the wrong direction again. Obviously, 1 month and 2% is not the end of the world, but we were getting a downward trend. So that is going to be a big factor as to whether CPI keeps heading in the right direction or not. What happens to energy over the coming months? Okay, then in light blue, you'll see I have a line down here highlighted, and that is shelter. Shelter I have highlighted for 2 reasons. Number one, this is the biggest piece of the entire puzzle. This is weighted as about 1/3 of the overall calculation for CPI. So this is the number one thing that drives the number, and you're going to see this number has been very stubborn. It does not seem to be moving in the right direction. If you look at this month plus the previous 6 months, you'll see they're all either 0.6s, 0.7s, or 0.8s to the upside. So the cost of shelter continues to increase. Over the 12-month period, unadjusted, that's 7.9%. So with 1/3 of this equation being 7.9%, you can see why it's difficult to bring the entire CPI number down. This was expected. Everybody knows that this number is being stubborn. There is the expectation that over the next 6 months, this number is going to start to move down, potentially dramatically. So that's another big factor as to where CPI goes from here. What is this shelter number going to be? And again, shelter is your home, your rent, your mortgage, whatever the case may be. I then highlighted this line in yellow. This is used cars and trucks. So if you look at this was down 1.9% in the month of January, and this is down 11.6% in the year. This is the only category that for the 12 months unadjusted is a negative number. So everything else has continued to creep up, and used vehicles has started to move in the right direction. You can see another big item, food is at 10.1%, and that's a mixture of food at home, which was at 11.3%, and food away from home, which was at 8.2%. So total food is 10.1%. So that continues to be a little bit stubborn. That was up 0.5% on the month. So obviously food and shelter are big numbers. That's a big part of how the consumer feels inflation, from their pocketbook on a day-to-day basis. So all in all, I think there's not really any other surprises on this report. I think energy went up. We hope to see that go down in the future. Shelter has been extremely stubborn. Food has been stubborn. But having said that, with all that said, the overall CPI data has moved in the right direction. It has gone down now 7 months in a row. Okay, so I just want to end on the SPY and the Bitcoin charts and take another look, because even just in the 15 minutes that I've been recording this video, you can see the market has taken a turn to the downside. This entire candle formed while we've been talking. So this is the SPY, which has now gone from green on the day to red on the day. The NASDAQ is also red on the day. And then if we go look at Bitcoin, you'll see we've had two 15-minute candles giving back some of the gains that we got earlier today. So like I said, this could be a very, very volatile day. I don't think there was any shockers in this CPI data. So my takeaway from this is, to me, this was very close to what was expected. There are a few things that are being a little stubborn. That shelter number, we really want to see that come down over the rest of the year 2023. And then obviously the energy number we want to see come down. That was trending in the right direction for 6 of the last 7 months. So all in all, we'll have to see what happens. I'm not sure if this day is going to end up in the green or if this day is going to end up in the red. I do also think this is probably just a 1 or 2 day knee-jerk reaction. I don't think there was any big surprises in this report. So my biggest takeaway would be this was pretty close to what we expected. So I don't think this is going to have a long-term effect on the market. I don't think this has any impact at all on what the Federal Reserve is going to do, and that is the main function of the CPI report. People look to this report to see how is this going to affect what the Fed is going to do as far as raising interest rates. And to me, there was nothing in here that indicates the Fed is going to change or pivot in any way from what they just said last week. So all in all, we'll just have to ride the storm out today. So that's what I got for you on CPI. And if you want to support the channel, you can hit the join button and become a member of the channel. Thanks so much for watching, and I will see you in the next video.